Just like how if you're going to the gym, for example, it wouldn't make sense for you to go to the gym and do the same workout or the same routine the whole year without assessing your
Yeah,
progress, assessing, hey, these squats, cool, I'm kind of done with squats now. Let me switch to lunges or whatever the case is. So it's the same thing with your trading situation, where at least monthly, we need to sit down, review what we did right, review what we did wrong, review what could have been better, look at some of our best trades, see how we can replicate those for the following month, and vice versa. Some of our worst trades from January, what could have been done differently? The losing streaks we might have went on, what played a part in that? The winning streaks we might have went on, what played a part in that? And how can we do more of the positive, less of the negative? So we got more people rolling in. So I got my notebook right here. All right. It's a little work session. So I'm gonna go through the questions and y'all can feel free to share them aloud. We might just take like 30 minutes or so. Set set a timer for 30 minutes. Uh, but of course, go in more detail on your own time. Go in more detail on your own time. But we're just gonna start off with reflecting on January and then start looking at a little bit of February. So for January, I want y'all to, and again, I got pen and paper myself. I'm not just telling y'all what to do that I'm not doing myself to get better. Think about your overall results for January. So, you have a goal for the month, right? And everybody's goal is a little different. Your goal might have been a dollar amount. Your goal might have been, you already kind of meet your dollar amount, but you want to get a better win rate. Your goal might have been trading related, where your goal wasn't a dollar amount, it wasn't a win rate, but your goal was more specifically, working on a certain strategy. Hey, for the month of January, I want to get better with my entries. For the month of January, I want to get better at bull flags, bear flags, whatever, right? And I want to have a trade log of at least 20 trades with this certain pattern
mm,
because that's what I want to work on for January. All right. So review whatever your goal was for January. And if you don't know what it was, that's all right. And then also think about February goal. All right. So January, I wanted to do X. All right. For me, for January, I wanted to work on trading less. So still being profitable, still making money, but trading less, being more comfortable, not taking all the setups I see, being more comfortable having 30 setups that I see and taking two. Now, what are the best two? If I can isolate the best two, what would they be? And I feel like that was good for me, right? January, I definitely had a lower trading volume, still had the same success. And it was more comfortable. My mind was more at ease. There was days where I didn't even look at a chart and it felt good. It felt good to not look at a chart. It felt good to take a break and just go read. I read two books this month. I used to read a book a week and I stopped reading for a minute. I read two books this month. It was good. Right. So that was something for me that was part of my January goal. There wasn't a certain dollar amount that I needed to hit that I hadn't hit before. Right. That's always there, of course, but it was more of, on the psychological part of trading, I want to fall back a little bit, relax a little bit, uh, ease my mind, but still do what I need to do. All right. So then start looking at February. And for you, again, assess whatever your January goal was. Could have been dollars, could have been win rate, could have been anything of this sort. February, I want you to think about a goal. Again, it doesn't have to be just money. It could be a certain profit risk to reward on your trades, where your goal is to finish with 3 to 1 for your winners and losers. Where if you finish the month with maybe a total win, your total wins add up to 1,000%, your total losses add up to 300%, right? Or 333.33 to be 3 to 1, right? That could be a goal. Your goal could be to make the same amount of money with less trades. Your goal could be to take more trades. You know what? I got new strategies I found out about in January. My goal in January is to take 50 trades a week that still meet a certain criteria. So not 50 trades just to take trades, but they have to follow this checklist. Has to be in the uptrend, has to have a pullback to a support level, has to have a bullish candlestick pattern following the pullback. If it has those three things, I'll enter. And I'm taking 50 of them so I can test this out, see if I can find consistency trading that way. That can be a goal, right? So review January goal and then set February's goal. Excuse me. Excuse me. For me, for February, what I'm thinking I'm going to lean more towards is uh, still dropping my trade frequency, even even lower. So I already lowered it. But I think February, I wouldn't mind limiting myself to maybe 4 trades a week or five. I'll cap myself at five. 5 trades a week. Whether those day trades, swing trades, and those are definitely not going to end up being scalps. I already know that's not going to be it. All right. And so what I'm working on myself is how can I, again, isolate the best opportunities? There's tons of trading opportunities. But when you limit yourself to a certain shot selection or a certain option selection, it forces you to really dive in and look at all the factors and get real granular if you want to take it for real. All right, so if I'm only taking 5 trades a week, then I can't take these trades and not take into account the trend. I can't take these trades and not take into account if this company has earnings the next day or whatever. Right? It forces you to drill down. And so I'm going to build out my checklist because if I'm taking only 5 trades in a week, then I want to make sure I'm stacking as much as I can in my favor for these trades. And that might include looking at the options flow on that trade. That might include looking at different time frames and make sure my time frames are aligned. That might include me looking at other stocks in that same industry and seeing are other stocks in that industry also moving in the same way. If I'm gonna take a put on Apple, I might look at Microsoft, Google, Amazon and see what they look like. Well, Amazon and Google look bullish, Microsoft look neutral, Apple, I want to go bearish. I might not take that trade. I might want to see, okay, all of the big tech companies are bullish right now. I'm rolling with my calls. Right. So I'm gonna build that out. But again, review January, go how you did. Give yourself a grade if you want to. All right. And really just look at that. And then think about challenges you faced for January meeting your goal, as well as how you can overcome challenges or what potential challenges might come for February. So for me, January, falling back on trading volume, one of the things that made it a little difficult for me, and I take full accountability for what I do, is forcing some trades during live trading sessions with the group. Right. Although there's a commitment I've made to show up and do a certain amount of Zooms and all of that. Right, there's nothing that says, Jordan, you have to take this trade on your account with your money versus, hey, y'all, here are 4 solid setups. And I did that to help curb that. So, okay, I'm gonna find setups or okay, we hopping on. I'm telling y'all up front, I'm not taking nothing. But I will spend the time and review what y'all got. I'll find some ideas. Right. But there were also instances where being live, it's like, man, I gotta give him something. I gotta give him something. And I also know that my trade quality, when I went into that state of it's mandatory that I find something, my trade quality decreased because I went from I'm only taking a trade that's a 9 out of 10 or a 10 out of 10, which is how I normally trade for myself, to all right, there's like a 7, but it could work. It's like a 7, but at least we'll have something. All right. So falling out of that, and just getting into, like I've already started, If I'm already took my three trades, hey, we might not trade anything on this session. We're here to trade. We might not trade nothing, but I'm going to go through, find opportunities, and I'll let y'all know whether or not I am taking advantage of that. All right. For February, I think I'll find myself maybe dealing with the same sort of thing. But that might be it as far as challenges with me trading 5 times a week on February. I think the second challenge would be uh, making my criteria not too draining because as far as I see with trading, I want to be profitable, probable, and comfortable. Having too many entry criteria can start to make trading a little less comfortable, especially if that means that I'm looking at this website, that website. If I'm looking at this sector, that sector, if I'm comparing all these different things, making it a whole college report for me to enter one trade, that's not comfortable, even if the trade is a winner, uh, depending on timeline and all of that. So that might be another smaller challenge is labeling out criteria that I feel is confident for me to take 5 trades a week and only 5 trades a week, but also not overwhelming at the same time. I don't feel like it's a chore. So I want to be able to still analyze the stuff quickly enough to be like, all right, cool, this is an optimal opportunity. All right. So that was number one. Number two, uh, and then go into number three being trading strategies you did in January. All right. What trading strategies were the best for you in January? Or were there any strategies that didn't work as well as you might have thought? Were there strategies that you came across or patterns that you came across in January that you like, oh, snap, them cup and handles really are fire? Or cup and handles really wasn't working for me, right? What were those things? And look at those. I know for me, it's still been kind of consistent where a lot of my um, bigger trades have come off of 15-minute, 30-minute triangles and flags. That's something that's been kind of consistent for me for the past year or two, where a lot of my trades are pennants. So I've been doing a lot more breakout trading lately. Excuse me. Whereas in the past, maybe 2 years ago or so, I did more mean reversion, which was something that was already broken out, already overextended, right? Looking for it to come back down to earth. Right now, I've been finding myself doing more of the initial breakouts. I like it. I like it. I think that might also have to do with the way the market was moving, and we had the same thing as normal, where we have those stocks that this thing has been going up 10 days, but that don't mean it's coming down on day 11. All right, we still have to be patient, and even when it does come down day 11, it might come down 11, 12, and then pop back up on 13. Right, so that's where you start getting caught up in the counter trend. So there's pros and cons to each approach. You can get caught up in mean reversion trading because the RSI is at 90, it's gonna come down. It don't come down as hard as you think it did. And then the next day it's back going up, and you lose the money you had on your puts. Or when you trade in breakouts, it was a false breakout, maybe. It shot up, came back down. It might have closed above the breakout level on the 15-minute, but not on the hourly. All right. Stuff happens either way. So I'll review that, think about that. I already shared mine as well for patterns and such. I didn't trade many cup and handles. I don't trade cup and handles actually. It's just not something I really ever latched on to for real. Right. So think about those patterns or strategies that you've learned, that you saw, that you implemented. What was well, what did the worst? If you could attribute maybe 2 or 3 patterns to your success or to your failure, what would those be? And then act accordingly. And going into more so a February approach is what lessons are you going to add to your trading plan for February or how you move through February that you got from January? And what adjustments do you need to make? So, how are you improving based on what you did in January, assessing what you did in January, here's how my paper trading account went, or here's how my real trading account went. I made a bunch of trades in January, but I ended up breaking even on my P&L. How does your actual account balance look? Is it a wavy looking thing? Is it up real high, down, up, down? Right? Assess those things. And then what things are we going to do differently to make up for it? Some things that I've added or changed in the past based on trade performance was things like not trading market open. I found that, this was, years ago, maybe like a year and a half or so. I found that me trading during the beginning of the day market open um, without a trading plan prior to the day, I was very inconsistent. And it would kind of piss me off because I don't like losing. Y'all know I cannot stand losing in anything, especially trading. I'm a damn good trader. I shouldn't be losing like this. Right. So at first I was like, damn, maybe I'm just not good at trading market open because of the extra volatility. It's easier to get faked out, which is all real things. All right. Then doing more, looking at what's going on, more analysis on myself, my trading. It's like, okay, Jordan, you fine at market open when you game planned it the night before, or you game planned pre-market. Then you already have a plan in place, triggers in place, alerts in place, levels in place for whatever happens in the morning. Right. And so that then became a rule for myself. And that's why I like to usually hop in during the middle of the day is okay, I can trade market open if I make a plan the day prior. Have I disciplined myself to where every single day I'm making a trading plan the day before? No, because I've prepared myself to do with or do without. And I'm fine with either one. I make money with either one. Right. So for you, you want to look at stuff like that. Another thing is I did get deep into scalping. I was on the 1 minute, I was trading SPX, I was doing good, but it wasn't conducive to how I wanted to trade. I found myself taking too many trades where I'm having days where I'm taking 10 trades. I don't want to take 10 trades in a day. I don't personally, I don't. Uh, I don't have to put that thinking power and thought energy into 10 trades in a day. That's me. 10 trades in a week, a little more comfortable. 10 trades in a day, I feel like I'm overdoing it at that point. So I fell back off of that. I'm not scalping on the 1 minute anymore. I still can. I do it in crypto all the time because you can do 75 times leverage on stuff. So you get 1% move, you got 75% gain. But as far as stocks go, I don't do it no more. Right. So that was an adjustment that I made. Uh, so think about those adjustments you need to make based on what you've seen for yourself. I haven't traded SPY for real in a minute. I don't even know why that is. I just have not been gravitating to SPY like that. I just continue to trade individual assets. And I really haven't been trading Apple or Microsoft or bigger names like that. I've been doing more large cap or medium caps and some small cap stuff. That's what's been working. And if I was cutting it up on SPY, which I probably could, I'd have taken some SPY trades this month. Nope. Because when I do set up my stuff the day before, SPY might not come up on my watch list of criteria that I'm looking for. But five other stocks do. Walmart, Google, whatever, you know what I'm saying? Colgate. If Colgate comes up for the criteria for my trade entry, I'm trading Colgate. If SPY didn't come up, I'm not trading SPY. Right. So again, review those things and make those adjustments. What adjustments do you need to make? Certain patterns you need to let go of, certain times a day you need to let go of. Uh, if you didn't sleep the night before, maybe you don't need to trade. That was something I did better with myself this month as well, where I did not even a deep analysis, but before like actually getting to the charts, how am I feeling today? Am I stressed? Am I feeling good? Am I feeling hype? Did I eat? Did I get any sleep? What's going on in my life? Relationships, friends, family. you know what? Today might not be a day for me to add charts into the mix and deal with money for real. Maybe today I just need a break. I need a mental break today from that. Right? Or maybe today's the day we finna run it up. Hey, boop, boop, boop. Texting people, hey, look at this, get this chart, get this, put in the Discord, boop, boop, boop. Right? It's days like that, you know? So that's another thing that I realized from doing stuff like this and really looking at what's going on with me. Even in this being my 11th year, is this year 11 or year 12 now? This might be year 12. This is year 12. Damn. Even being in year 12 of being in the market, understanding that there's always stuff to learn, but there's not maybe not as much stuff I need to learn, but there's still stuff I can tweak and improve on and get better on. Steph Curry still shoots practice shots. LeBron still goes to practice and does drills, right? People who are at the top, far better than I am at trading, right? We're going to compare, but people who are at the very top, you think Kobe was like, well, I'm in the GOAT talk. I guess I'm just not going. No, Michael Jordan, no. Michael Jordan was still practicing, still putting in work, right? Looking at the full thing, not just practicing the basketball, but also dieting, training, right? All these other things that aren't even directly related to that. So think about those things too, right? And so that was something else that I did that I want to salute myself on was being more aware of where I was mentally for certain days that maybe I needed to trade or maybe I didn't need to trade. Right. And then maybe this is number five, number six. I kind of got one more. Is what do you want to learn or get better at for February? So not only are we making adjustments, right, we're looking at what happened in January, making adjustments for February. We're looking at our goal from January, seeing how we came out, looking at new goal for February. Again, it doesn't have to be directly related to a dollar amount. And then what is there? Because it's still opportunity to learn, right? Whether it's during the market or whether it's the end of the day, right? What is there that you want to learn? Hey, you know what? January, I killed it on bullish continuation patterns, right? Ascending triangles, bull flags, bull pennants. Those are continuations. This month, I want to get good at bullish reversal patterns, like an inverse head and shoulders, right? That's a bullish reversal. Falling wedge is a bullish reversal pattern, right? So that could be something that you say, I want to get better at that. The market's at all-time highs. Maybe I want to get better at identifying stuff that's at tops that's about to reverse. However you want to do that. Maybe it's a certain indicator you heard about or seen or played around with, and you're like, no, I want to get better at utilizing this extra tool. That's all they are, is just tools. Right? Sometimes you can screw a screw in with your hand. Sometimes you need a Phillips head. Sometimes you need a flat head. Just tools. Right? I want to get better at using this specific tool to accomplish my job. Right? And so that might be a thing. And we've gone over different ways to use different indicators if you want to use them. There's different ways to just manage or maneuver that one indicator settings to where you adjust what it does for you. Like a Bollinger Band gives you that range that sometimes going to be bouncing in between. But if you tighten the Bollinger Band from 2 standard deviations to 1 standard deviation, well, now you can see when it's tightening up, about to expand and break out. Now you can see how tighter it gets. If you open it up to a 3 standard deviation, you can see when it's extremely out of the way than where it should be at. Right? So that's something that you can do as well. So that's number 5, 6, whatever number we're on. And then number 7 is something that I bring up all the time and bring it up again. How can you get better with somebody else? Do you need accountability? Do you have somebody you can talk stocks with, that you can talk trades with when you're dealing with stuff in the market? Just like if you just had some relationship issues, you go to your homeboy, homegirl, your partner, whatever, your brother, whoever. All right, you dealing with stuff with your cousin, you go to your other cousin and talk about it. You vent to your friends from high school, college, whatever, right? Like you have people that you go to when you want to talk about certain topics. Who do you go to for trading? When you want to talk charts, when you want to talk about how the charts was good today, when you talk about how the charts was kicking your butt today, who do you go to? When you have a new strategy, right? Or you taking down the things that I'm talking about and saying to you now, when you're taking those things, like, okay, here's my plan. January was here's how February is going to be great. Here's the plan. How do you create accountability for yourself to stick to that? Do you have somebody for that, right? If not, I suggest you get somebody for that. I told y'all before, I went through that too. I was like, this is it. I figured it out. This is the strategy. And then like 2 days later, I was taking a trade and my homeboy was like, bro, does that trade fit the thing you just told me? And I was like, nah, but bro, look. He said, bro, you just said you were going to do only the profit calendar. And now you're talking about this TTM squeeze breakout. I'm like, I know, bro, but he said, bro, you just said. So, okay, you're right. You're right. All right. So I have personal friends I've taught trading. My mom has been somebody like that for me as well. She's like, is that your plan? Are you sticking to the plan? What happened today? How'd your trades come out? Did you stick to the plan? So have somebody like that, whether it's somebody that knows trading or even if they don't, they can still be somebody you can talk to this stuff about, preferably verbally, so you can just be more free flowing and just get it out. Uh, or somebody who does know trading and y'all can like really collaborate, right? So that's number six, number seven, whatever you're on is what are you gonna learn? What are you going to improve on? But not just improvement, but what are you going to actually learn? Something new, something to expand you, something to add a new tool to the tool belt. Even if you don't whip it out till the middle of the month, it's there. Right. Preferably something that you've been dealing with and trying to avoid. I'm gonna learn how to trade FOMC. FOMC happens almost every month. Usually I don't trade on that day. I'm gonna learn how I can trade during FOMC days and be comfortable. Right? That's a thing that you can go and this will require more back testing, but you can go and look over past FOMC days, see how price moves, see if there's anything you can find that gives you some sort of pattern to the stuff. Right. So that's it. This is recorded. I'm gonna post a recording. Y'all can unmute, share any thoughts, opinions, questions. And then afterwards, I will post the record and try to get it up tonight after it downloads and processes. Y'all can unmute, but I will not force y'all to unmute. But you can. Let's get it.
I'll share what I'm doing.
Yeah, what's up?
So I'm now trading, as we discussed too, one pattern only a week. So I'm just only looking at like this week, I'm going to focus on triangles and the different variations of the triangles, ascending, descending, the symmetrical or whatever. Like next week, I'm going to focus only on like the flags, that type of thing. And I'm going to find the different variations and the little things that make them successful or not successful. So I'll have an opportunity to do that. If my setup is not a flag, then I don't trade it. So that's what I'm focusing on, trying to be disciplined with that.
I
So
like that.
yeah, and I'm gonna do that for a few weeks, for a while now until I learn these setups that work for me. Because some work, some like last month I was really successful trading triangles. That worked really well for me. So now I'm going to move on to another, but I really want to get in depth how to trade like flags, and I think you can also use Fibonacci with that
Mm-hmm.
and determine it's more successful if it's above this level and it breaks or not. So I want
Yeah,
to learn that type of thing.
yeah, I like that.
Yeah, so that's my goal.
Thank you for sharing that too.
Hmm.
Because that, like you mentioned, one, that's going to work on your discipline. Two,
Hmm.
like, look, this is it. And you have to do exercises to strengthen your ability in these things. To strengthen your ability with discipline, you have to exercise it. All right, get used to, okay, damn, but Jordan just showed me this bomb triple top. but it's not a triangle. I'm only trading triangle. There will be more triple tops next week if that's the pattern you're going to trade.
We went through that today.
Yeah. And that's what you need. You need somebody you can text and be like, hey, bro. I'm like, no, that's not what you said you was doing.
Right. Exactly.
And then
Discipline.
you went and found a different pattern. So that part, and then additionally, is going to build the proficiency. So yes, it's good to have that, right? Last month you were great with the triangles. Good. Normally we could just be like, well, trade triangles again this month and next month and next month. That works. Right. But now you got triangles, you feel very solid. Hey, you know what? With triangles, I'm an 8 out of 10, 9 out of 10, 10 out of 10. Never gonna be a 10 out of 10, probably, but 8, 9 out of 10 on triangles, cool. That's in the tool belt, that's in the bag. We
Hmm.
got that. Whenever we need to whip it out, it's there. Right now, cool, it's flags. Now, boom, we're gonna get 8 out of 10, 9 out of 10 on pennants, 8 out of 10, 9 out of 10 on head and shoulders, boo, 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 whatever it is. Right. And then come May, come June, because it's those months are coming, right? Come May, June, now you're a 80%, 90% confident, successful trader with 10 different patterns, 12 different patterns or strategies. So when you look at a chart, whereas in the past, you might be like, okay, well, is this I don't know if this might, you might be like, okay, cool, it's doing that and it's doing that. Okay, cool, boom, boom. And you can flip through. That's people always ask, how do I flip through charts to find my trades in like 3 seconds? It's because I'm scanning the chart and going through all those different things I've become proficient in.
Hmm.
So then it's like, okay, click. I don't see nothing. Click. Because once you've done it so many times, it pops out to you.
Hmm.
After you traded one pattern for a week straight, and that's all you've looked at, next week you're going to see it. Just like if I say yellow cars, yellow cars, yellow cars, if you go drive, you're going, damn, it's a bunch of yellow cars all of a sudden. Right. So I like that, bro. Thank you for sharing. Thank you for sharing. And that's a suggestion for y'all too. If any of y'all are trying to get more proficient at certain anything, again, it doesn't have to be patterns, but it could be anything related to trading. Focus in on it for a week. Right? Don't do anything outside of that and really hone in. Or it could be a month that you do it, or it could be a quarter if you have a fully drawn out strategy. It can be a quarter where you only trade in a certain process.
Those patterns work. I mean, they work
Yep.
definitely.
They do, but they only work when you have an understanding of how they work and how to work them, right? Like you said, it could be a bull flag, but after a certain retracement spot, that bull flag really ain't valid anymore.
Exactly.
Now it's just become a full on reversal.
And that's the whole reason of doing it for a time so you can learn the nuances of it.
Mhm. Yeah, and you gotta get it in because it's not just the time too. Right? It's not just practice makes perfect or time doing something makes perfect, but what you do during that practice, what you do during that time is what makes the difference. If we're both putting 100 hours of work in on something, but that 100 hours, I'm analyzing it from top to bottom, and you're analyzing it kind of lackadaisically, we're still putting the same amount of time in, but I'm going to get more because I'm putting more in the time that I'm putting in.
Hmm.
Right. So another valid point, bro. Another valid point. Anybody else got anything y'all want to share? Y'all want to add? Y'all want to ask?
I'll put another one if nobody's going to speak. I spent a lot of time trying to go through my watch list the night before, and then come pre-market, my watch list is tore up because of the stuff that moved so much in pre-market. So I stopped setting up the night before because of that, because it doesn't matter if the pre-market changes everything.
Very true.
So it was a
Very,
waste of my time.
yeah, that's the true thing. That's happened. That's happened to me throughout a couple times where I'm like, man,
That's what I learned. Hmm.
forget this. Forget this. But right, then I was like, okay, let me see why that's going on. Oh, we got fed this week. We got a bunch of earnings this week. okay, it makes a little more sense that this week there's going to be a bunch more gaps,
Mm,
right? Versus periods where there's lower volatility because the market moves just like stocks do. You know, assets moving, high volatility, low volatility, high volatility, low volatility. When you're in a higher volatility state, like when the VIX is elevated, you're going to have more of those gaps and kind of swings where your pre-market stuff or your post-market analysis might be invalidated in the morning. But when it's a lower volatility environment, smaller gaps or less gaps, right? Then you're able to avoid that. The other thing that I just thought about while you said that is maybe you make your list pre-market. Now I know you in Cali, and
I'm
that's a
Cali
little
now.
yeah, that's a little early. But right for anybody else who might have thought the same thing or experienced something similar, you do it pre-market. Now you can take those gaps into account if there are gaps, or if there's not gaps on the stuff on your watch list. Well, cool. You know, it's the same price data that you would have had post market, right? So that gives you another opportunity to overcome that hurdle. Or you could be like, screw it, I'm not doing either one of those. I'm just going to get comfortable trading intraday,
Hmm.
right? And so, hey, you know what? After the first hour, we already have 60 minutes of price action. Cool, I can work with what we got today. Granted, pros and cons to everything. Granted, I might have missed out on some of the bigger moves of the day too, because usually those bigger moves happen in the beginning of the session, end of the session. But we also know you can catch some moves in the middle as well. So stuff to think about. I always think through those realizations. What could have caused it? How can you overcome it if you want to overcome it? Or if you want to avoid it, what do you need to do as an alternative? So thank you for sharing that as well. Anybody else? Or if you want to go again, you by all means can.
Okay, I got it. My other issue that I have, since nobody's speaking up, is staying in those. I don't want to be a scalper. I want to be able to stay in the trade longer through the ups and downs, through all the price action and stuff, and not get scared by a big red candle or something. So that I'm working on that too. It's just kind of discipline and understanding price action so that I'm not shaking out on a red candle.
Okay. Melena asked what your favorite pattern is too.
Oh, is she?
Yeah.
Right now, my favorite pattern, I have two that I'm really trying to master right now are the triangles, which I had great success with, and now the flags, the various flags. So flags are good though, but so the triangles. So I have those are my two favorites right there.
So with your staying in the trade longer, right? Oh, it's that's the thing that there's so many different work throughs for. On one side, you can just trade a bigger time frame or look at the candles on a bigger time frame. Right?
Yeah.
You know, on a chart, you're going to have more red candles or more pullbacks on a smaller time frame than on a bigger time frame. Right. And so if you got to figure out why you're getting out of the trade first. What's the root cause of this thing? Right. Is it red candles scare me? Because that's the thing.
That's it.
Right. That's the thing. If red candles scare you, then you got to reduce the amount of times you give yourself an opportunity to see red candles or get over it. Right.
Mm.
But how do you reduce the amount of red candles you see? Instead of looking at the 1 minute, go to a 3, go to a 5, go to a 15. Right. And really let that candle work itself out. Because in the green 15-minute candle, you can have 5 red candles on the 1 minute. Right. But then the 15 minutes still ends up being green. So that's one thing. The other thing is like we talked about having a trailing stop. And when
Hmm.
you have the trailing stop, it's out of your hands. All right. You are in the trade until it pulls back to a certain predetermined spot or predetermined price point or percentage. It's out of your hands. All right.
Hmm.
Elena said, go to the gym when you place a trade.
Yep.
All right. So that's the other thing is if you enter the trade, you have your criteria set. And it's something I told you before. Looking at the chart don't change what it's going to do.
Right.
If I had superpowers in my eyes and I could control the chart by looking at it, I'll look at it all day. But since I don't and I can't, I get in, I set my alerts, and then I go about my business. It's either going to hit my profit target or it's going to hit my stop loss or move in one of those directions, long enough where I can come check it 2 hours later and be like, okay, cool, this is where we at. Right. But you have to establish rules that you're comfortable with.
Hmm.
Right. Just like you have a daughter. At some point, you were able to leave your daughter at the house by herself. At some point. Right. There's certain rules because not an age, everybody's different. There's not an age that there might be for you, but there's a certain maturity where it's like, you know what? You're 15, you can't even drive, but I can tell you are mature enough to manage yourself at the house by yourself. I don't need to come look at the house cameras. I don't need to come check on you. I can go to work, go to this, go whatever for maybe 5, 6 hours, and you will be completely fine in the house, not throwing no wild parties, not burning nothing down, none of that. All right. Maybe I'll call and check on you once at hour number 3. There's a certain spot where you have that comfortability. With your trading rules, you need to have that same comfortability. All right. With a 5-year-old, you couldn't do that. When you have a toddler, when you have a newborn, there's not enough comfortability for you to probably even leave the room for real with a newborn, unless you're about to just go to the bathroom real quick and they sleeping. Right? With a newborn, you don't have that same comfortability. I got to keep an eye on it. I got to see what's going on. Your trading needs to go from newborn to more mature.
Hmm.
Well, cool. Here are my rules. Here's the situation. I have put in the work, or parenting wise, I have put in the parenting. I have run the test. I have seen and observed that you can hold up on your own without me sitting here staring you down for whatever might happen. So once you feel like that with your trading, then you have to just act like it. You know what? Cool. The flag is this. Here's my stop loss on the flag. Here's my target on the flag. That's done. Trade is entered. Close the laptop, close the brokerage, whatever. Ain't nothing I can do no more.
Hmm.
I lined it up. This is where it should go. This is where I'm projecting it to go. It may go there, it may not go there. Whatever the outcome is, I'm already accepting that. The reason I can accept whatever outcome comes is because I've put in the time or the study or whatever it is to know that the likelihood of this working out is in my favor. One. Two, I'm managing my risk appropriately or sizing appropriately to where if I do lose this trade, if I do, it's not going to be a major hit. When you or I were trading the other day and we was down, we lost the trade. We lost CME. You said CME down. Did it hit the stop loss, Joe? I said, did it hit the stop loss? No. All right, I'm finna hit this next set of squats, dude. Hit the
You didn't
stop.
even say that. You just said, oh, okay.
Right? Cool. Hey, it hit the stop loss. Okay, cool. We shouldn't be down more than 15, 20% tops. You took minus 13, 14. I took minus 11. Okay, on to the next trade.
Hmm.
Boom. Here goes Marvel. Here goes Marvel's puts. It's about to look good. Boop, boop,
That,
boop.
that was huge.
Right? Marvel
Hmm.
hit 50% that day and then 166% today on the swing.
Hmm.
Right? So the reason we can do that, the reason I was able to do that, and you saw me live, calm, chilling, working out in the trade, is because I trust my trade or my kid in the other scenario. I trust it to be left alone. And whatever is going to happen is going to happen. And it's going to be fine. It's going to be fine.
Hmm.
Right? And if I lose, it's not going to be the end of the world. The whole time we was in the max, we're going to lose on this 20% that if it shoots down like crazy. All right. But if on your winners, that's what we talked about earlier, risk to reward, if you lose 20%, but your winners are 60%, it takes 3 losers in a row to cancel out one winner. That means if I win a trade, I basically got to lose 4 times in a row to be at a loss. I got to go 25% after my winner. I gotta go 25%. I gotta lose four trades to
Mm.
come to a loss. And that loss is just 20% now. I'm only down 20%. Right. But you've done so much training, sure, it'll happen sometimes. Right. Steph has had games where he went 0 for 7 from three. But most of the time, that's not going to happen. Right. And so that's where the stuff we were talking about earlier, and you taking the week to focus on a certain pattern or building the discipline, right? Doing the exercise of discipline, doing the back testing, like all the stuff that we've been teaching and talking about and going over. That's where that all comes into play, right?
Thank you.
And you just got to do it. It's a hump. Leaving your daughter at home alone for the first time was probably a little nerve wracking. The second time is probably a little nerve wracking, especially since it's a daughter. But just leaving a kid at home for the first time on their own is a thing regardless. Having your kid go to the first day of school is regardless of how well you train them, talk to them, whatever. It's a thing, you know. But you can all you can do is put in the time and the energy and the effort to build up so that when it is game time, when it's go time, you put yourself in a position to get the best outcome. And hey, your kid might get into a fist fight on the first day of school. I've been there. I don't have a kid. I was the kid. New school district, everything, get into a fist fight first day. That may happen, right? But year in and year out, if you have trained your child or parented your child the right way, for the most part, they are not going to get into a fist fight every day they go to school or the first day or whatever, right? You take the L's, they're gonna come. Your kid gonna get suspended, your kid gonna get a zero on a paper, on a test, whatever. It's gonna happen. Right. But it's just like that with trading. Sometimes you're gonna lose. You ain't gonna go flawless. Let go of that idea. Accept that you are going to lose. Accept it. That might be one of the biggest things that made a difference was like truly, honestly accepting I am going to lose trades. We don't go into the trade expecting to lose, but we know it's a possibility. And I'm accepting that it's a possibility and making peace with that before it even happens. If I lose, I'm going to be all right. I've prepared myself for that. If I put my whole account on the damn trade, I ain't going to be all right. Ooh. Well, with the big loss, I ain't going to be all right. But you get my point. That just took me somewhere.
Yeah, appreciate it.
Yeah, bro. So it's part of the journey, but those are different things you can do to just get yourself used to staying in the trade longer. Now working off the bigger time frame, just setting alerts and leaving it, setting a stop loss and a take profit order and leaving it. Uh, Even if it helps you in the beginning, doing it off percentages and just setting a limit order in the brokerage where you enter a trade, it's $100 contracts. You know what? 25% stop loss, 50% take profit. I'm going about my day. Right. And you just set the limit orders in there. You go about your day. And sooner or later, you get an alert. The trade closed, either it hit profit or hit stop loss. Right. But at least you didn't have to worry about sitting there and looking at the screen the whole time and all of that. So that is a thing, man. Get up, get out your office when you take a trade, leave. You gonna just sit there and what's it doing? What's it doing?
Sounds good in theory.
Yeah. You gotta find a way to do it. And so that's where again, like I was saying, using other people, leverage other people. If you're gonna trade today and you know you have a problem sitting there in front of the charts unless you have something to do, make an obligation. Hey, bro, let's get lunch at 12. All right, cool. Yeah, meet me at the little barbecue spot on 49th. All right, bet. Click. Cool. You taking your trades. Now you have to leave to go to lunch. Either you're going to close the trade or, right, I encourage you to find the trade before you go to lunch and take it and stay in it, right? Or you're going to set some alert or some stop losses or take profits in place so that you can go out and enjoy the lunch and don't pull up TradingView on your phone while you at lunch. Hey, bro, I'm gonna run to the bathroom real quick. Oh, okay. Microsoft is okay, okay, okay. Don't do that. Don't do that. Because if you got to start at some point. If you don't break the habit, you're gonna have the habit forever. You have to ease off of it. Trust yourself. Trust your setup. Affirm yourself. Yo, I've been trading bull flags for 2 weeks straight. I know what the heck I'm doing with these bull flags. I know they can still not work my favor, but for the most part, I know how to identify a solid bull flag. This is a bull flag in the uptrend. The market is green today. We just had bullish news. This should be perfectly fine. And it might still lose. It happens, right? But the odds are in the favor that it wins. And I'm gonna just let it be and I'm gonna go about my business. You can do it. You can do it. I'm glad you, like I said, I'm glad you sharing because I'm sure you're not the only one that's having those thoughts or those feelings as well. Right. Other people might just not be in the space to unmute or be, a little Zoom shy.
Yeah, I trade so much now that I've been trading long enough now to feel all that stuff now and understand, everything and what I'm going through and can articulate it. So
Yeah. It's a process. And the sooner you start implementing those things, the sooner you get to the point where did we hit the stop loss? No. Okay. Did we hit the profit target? No. Well, what are we talking about? Why are we talking about this trade right now? Well, 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 what? Because if it didn't hit the stop loss and then hit the target, then it is consolidating, dude. Like, what are we talking about it for? How much time we got on the contract? 2 weeks? What are we talking about? What are we talking about, man? Come on. Come on. What? No. All right. And so that's the other thing. Just think about it objectively. Be objective. Try not to be subjective. It is what it is, and it ain't what it ain't. It's in the uptrend, it's in the uptrend. It's in the downtrend, it's in the downtrend. If it breaks this level and I'm in calls, just like our CME that we lost. There was a level. Here's our stop loss rate. If it closes below this on the 5 minute, we getting out. It broke below it and closed below it on the 5 minute, and then that sucker drop hard. Right? But that's the reasoning for the stop loss being where it is. And that's why until it broke that level, I don't care. But once it breaks it, I best to be getting out. This is going down. All right. So good session, y'all. It is 10 Eastern, 8 Central, 7 Mountain, 6 Pacific. Man, 6 Pacific. Y'all still got so much day left. It's 7 Pacific. It is 7 Pacific. My fault.
yeah.
See, that's what I get for time zone jumping. That's what I get. I gotta stop moving around. But that being said, thank y'all for coming through tonight. Hopefully, I took down 1, 2, 3, 4, 5, 6, 7 things or so, maybe that were able to help you get better as we go into the close of this month, opening a new month, which started today. Uh, and just improve your trading game. There's always ways to improve, always ways to get better. Don't just come on here and listen to me talk or listen to people share, but actually implement this stuff if you are taking this seriously. You're going to get out of it what you put into it. You just show up and don't do anything different. You're going to be sitting on Zoom again in 4 months in the same exact spot, feeling the same exact stuff you're feeling now, thinking the same exact thoughts. Or you can be like, yo, I made this change, that change. I realized this. I learned this. I practiced this. I back tested this. I got an accountability partner with this. Stuff is looking different now. Because when you put in different, you get out different. That's just how the world works. But you can't keep doing the same stuff and thinking it's going to miraculously change into some new result. Don't work like that. All right. If you want to get something you ain't never had, you got to do something you ain't never done. Y'all be easy. We'll see y'all tomorrow.